Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through our market update, update the earnings trades, and Joe's back this week. So we'll have Joe's analysis to wrap it up. So let's get started here. All right. So major indices all still holding state one, been in there a very long time, all of them, um, all the way through. Yeah, sector overview, no change from last week, really. So we got five in, bearish states and two, four, six, and still in state one. So, no change week over week. As far as pi, we were at 61 last meeting, so we did have a drop there. We're, kind of worried about that. So we had a nice 8% drop overall. And we're no we're not overbought, below 45% here. And we, really the deltas, we had some sevens go to eight. So let's take a look at that right now. All right, pull it in a little. I don't like that. There we go. Okay, so last week we're at 46%, dropped down 43, so not a big change there. The eights did pick up though, 18, up 4%. And
Hey,
you
Josh,
can see, yep,
are you sharing your screen? I just see a black.
yeah, I'm sharing.
Yeah,
It's my study.
How about there?
I thought it was just me.
Good?
Now I see it. There it goes.
Okay, sorry.
Thank you.
I
Yeah,
don't see it yet.
the new Zoom functionality is I started back here just talking through, like there's no change here. And now I'm back up here on the market pulse. So yeah, sorry, these new Zoom controls messed me up here. Um, so let's see, back to here. So, week over week, we're at 46 state ones, so we dropped 3%, and then the eights went, basically at 4%, and those came out of the sevens there for the most part. Nothing really going on with twos. It's kind of surprising, we had nice, couple down days there, and really nothing with the twos, just minimal. Um, but the sevens, kind of in the eights were the big things. Although fours are kind of grinding higher, so we'll just have to see if what happens here. Um, I think kind of the big thing are the key support levels, and we'll go into those in a few minutes. But just sevens, eight. There's not much left in seven. To go into eights, so we're at like 5%. So not a whole lot, to push there. So yeah, just I think we're kind of waiting, see if we hold levels and see how the big thing tonight after close is Nvidia, the big AI trade. So I think that'll definitely let us know direction wise, in the next day or so. So, last week we had all these huge highs, or the previous week, and since then it's pretty much gone flat. 59, 10, 113, 107, got a little spike in the lows, just in that kind of drop, kind of big drop day. So, we've seen a lot of this in the past where we're, getting a lot of highs, we get a little spike in lows, and nothing much after that. So we'll see if we get another big spike. This isn't a big spike, 177. This is like a bigger spike here, 369. That's back here 241. So this is kind of how it's been going for pretty much the whole year. We just get little spikes, and then resume higher. So, we'll just have to see, but, not, the highs kind of bottoming here is a little concerning. And we had, kind of talked about that. Things started kind of rounding off and things like that. So, the 20 days, those crossed. And if we look at the 50s, those are kind of, held. Um, but, if those cross, things get uglier and, 200s are still way off. We haven't even touched that since like August. So, and then, this whole run back here, this is from November 23, basically to August. The 200 moving average didn't get close. So, still not even close on those. So, yeah, it's kind of a overall bullish there, and kind of by the pullback mentality. That's just kind of what that's showing. But we'll just see if we get any kind of bigger thing, especially after close today. So with Nvidia, it's been a big market driver. With the AI trade. Excuse me. Yeah, and then last week we were kind of talking about this starting to roll over. It did roll over. We'll see if it crosses the 50. You know, last time just very minimal, and then turn back higher. Same thing here. This one, we got a little more, a lot more here, a lot more here. So it's kind of been lesser and lesser as far as the pullback strength. But we'll see if we can cross below there. But yeah, we'll just have to see. I think the key things are watching these levels, which we'll get into here. So SPX first, you can see back here, target 3 is providing support here. That's 58879. So you can see 3 days. I think we're right in that area again. Since that breakout, very bullish thing is if this this thing holds, this we can really take off. If it doesn't, then probably back to 2 type thing. But I think this is a big level right here with SPX at, just call it 5880. And the 20-day is right in the same neighborhood. So, 2 kind of big things that we want to watch for bullish trends. If we can hold that 20, hold target 3, we could take off. Just kind of like a head fake to the down here. But if it breaks, then kind of all bets are off as far as I don't pulling back and getting a deeper correction, off of that election move, basically. So, been in here a long time, well above averages for everything. Target 3 met, things like that. So let's take a look at the chart. So I'll put up the ranges. All right, so this was previous range 48 to 58. So now we're at so now 58 is the bottom, 62 off the chart here, would be up in this range. But you can see right here, 20-day EMA 5881, target 35879. So really this area is what we want to be holding, to stay bullish, staying above 20-day. And you can see same thing, 3 days testing, so far holding. Current state is 5886 right above it. So yeah, I think this is key. And a lot of these runs we've held at 20-day. The previous one we dipped held to 50, but longer term, a lot of these Runs we've been seeing over time have been, the 20-day being, the key support for these runs. Back here, we can scroll back. This whole monster run is all 20-day. Once that broke, turned over, just slight pullbacks, sometimes violent like here, but yeah, so that's what I'd be watching, that 20-day holding that, to the upside. You got your all-time highs, 60, 17, and then, above that, 6,200. So we got really it's 20-day, and then right below that's the bottom of the range 5,800, and 50-day EMAs right 10 points below that. So that's your key levels, and I'd be watching that 5880. That's kind of the key thing right now for SPX. All right, Russell, huge pop, pullback, you know, um, over the average days, made, obviously bigger than the average move. Same story. Key thing right now is that, 2,300. So, staying above that, which is the previous all-time high. And I'll show you that on the chart, and not all-time high, sorry, recent high. All-time high is higher than that. But the recent high back here, sorry, I'll get the chart on that. I'll just go to the chart because this one's more important than the modeling. This one right here, that 23 recent high, that's back in July, staying above that. But, that's the bottom of our range is 2,300. So, two big things really, holding that. And you can see past, 1, 2, 3 days been holding that. Top range 2350 up top there. All-time highs, I think 2460 something. And we got in the ballpark, but about 20 points or so away from that. So really, the SPX and Russell are right on kind of key levels. And then, below 2,300, we got the 50-day, which is important for Russell, 2256, below that 2,200, and so on. 200 days, right? At the bottom of the previous range, 2,100. So that's really, the key things is holding these levels. And, if we get some good news out of NVIDIA, I could see this thing popping. Bad news, I can see it, pulling back further. And that's kind of where we're at there. Okay. Yeah, I'll talk 10-year. Just kind of pull this up quickly. So we're at 4.4. 4.5 is kind of our big threshold, I've been talking about. So we're right below that. Not sure why these charts aren't working well. There, of course, pulled up as soon as I click off. Come on, Yahoo. Yeah, so, it's been growing higher. Wow, this is, not sure why these aren't working. We don't have the 10-year in our system, so I can't really. There we go. So, since the cut, just been, straight line up for the most part. So kind of looking like we're getting near. So, this previous top was 4.7-ish. So we're a little below that, as far as that high. Haven't really touched 4.5, getting in the neighborhood, but, see if we grind higher. But, above 4.5, I'm really, I just think that's a big headwind for markets, overall, especially Russell type stocks. But it's been holding right below there, and yeah, the deck keeps getting bigger. I think we crossed the. I don't know if you guys see uh, that clock. I don't know if you guys know this one. It's a website. That clock. We did cross 36 trillion. It's a fun little site. Yeah, to just go through and sometimes depressing. But we crossed 36 trillion, and those haven't been getting any smaller. The deficits, and so those are up for auctions, and if we don't get a lot of bids for that, new debt issued, those rates can go higher. So that is a concern. Uh, Going into the Fed, so like a month out, kind of big change from last week. We had 82% for a quarter cut. Now it's getting closer to the 50-50. So, but between there and January, they're still calling one cut pretty much. So just not sure which month. But still one more cut between, the next two meetings. Haven't really gone too far out after that, but they're kind of lower, slower cuts is kind of what are being priced in right now. So, and balance sheet, nothing, right below 7 trillion. Yeah, it's a lot of liquidity pulled out, from the top, pretty much like 9 trillion. So it's 2 trillion out. Uh, and, below this kind of level, once we, if we start turning lower, this is COVID timeframe. So this is pre-COVID, 4 trillion. So that's another 3 trillion to get back to pre-COVID levels. But not too much talked about as far as the balance sheet runoff and things like that. So I always keep my ear out for that. But I think that was it. Overall market, I'll open up to questions, comments.
Yeah, this is Dave.
Yeah, Dave.
The NVIDIA thing is obviously on everybody's mind. It's
Yeah.
investing in any of the Mag 7s or whatever. So it'll be whatever it is. We'll see what it is at the end of the day. Not going to guess at how good or bad it might be, but um, just as an interesting thing to note, I don't know if anybody else is going to listen to the conference call, but I will, and I'm gonna be very interested in see what he says, what Jensen Heng says about the overheating issue. Um, it's one thing to say, well, yeah, there's a headwind out there because our products run hotter, but what does that mean to an individual that has a gaming rig that's using a GPU from NVIDIA? Probably not so much, but for a hyperscaler, it means a heck of a lot. It's like, well, are we going to be able to run our new data center or not? Or are we going to have to redesign it because it won't run with the current rack configurations that we've been suggested to use?
Mhm.
Then there's the general other, probably 90% of companies, or maybe more than that, I don't know, can't give a percentage, but that just have some corporate use of computing systems, and they have AI and AI infrastructure requirements for, what Ford or General Dynamics or Lockheed or Whirlpool, or a fintech company needs to run their business. That's a
Mhm.
different kind of question, so maybe there'll be some more clarity on who is using all this AI infrastructure and who isn't. So right now, we just know the 7 companies that have big investments in it. So of course, they're going to want to get their money back from their investments. So they're going to be, talking it up, if you will. AI is still a thing, and you should invest in it because you need to buy our new Copilot or personal assistants because they're going to be so much better.
Mhm.
Now, will individuals like you and me be willing to go out there and spend 20, 30, 40 bucks a month just to have a better personal assistant? That's a good question too. Personally, I'm a little doubtful on that one, but I think you'll see more ad-supported free apps out there for using their personal assistant. You don't have to suffer through 2 minutes of ads before you get an answer to your question. But that's just my opinion on how they're gonna get their money back. But all these big 7 companies are going to get their money back, and they're going to get it back from their current consumers somehow. So,
Right.
that'll be interesting to see how that all rolls out. Probably won't affect, anybody on this call and their personal finances much, but it might have an impact on some, people that are kind of like going month to month on their paychecks. Be interesting to see how it turns out tonight. Anyway, it's where are we going to go next in AI? Let's assuming that the AI trade just doesn't fold, but kind of goes out with a little bit of a whimper now that the everybody's got all the infrastructure that they might need, or maybe they don't. We'll see where that. NVIDIA should answer that question tonight too, pretty well, in my opinion. So.
All right.
So that's a wait and see where AI is going. That's pretty interesting to me, but and I just stated the reasons why. Maybe not so interested for everybody else, but good luck with all your new investments with the new administration, everybody.
Yeah, thanks, Abe. Yeah, this EPS here. So 0.75. I'm not sure because they had a split. I don't know. We had this huge buildup and then 0.6. So I don't know if anyone know when that split was? Was it between these? That might make sense then, but I'm
Let's
not
see if I can
sure.
get it fast for you here. Let's see.
I'm sure that's what it is, Josh. I don't remember
Yeah.
the date exactly, but
Yeah, probably there. So yeah, so this isn't like split adjusted or EPS. Anyway, so yeah, so they're expecting 0.75. You can look at the revenue. I mean, previous like the consensus like monster revenue increase. So yeah, we'll see how they do. So thanks, Dave. Okay, anyone else?
The stock split was back on 7/16 of 21.
Oh,
For
yeah,
NVIDIA.
so that went in there then. That's a different, yeah, I guess. That's way back here. 21.
no. No.
No. No, it can't be. That was
No, we
fairly
had the 10.
recent.
Yeah, it was. The 10-for-1 split was recent.
Let me see. We have this, should have this data, right?
That's right.
Splits. Yeah, 7/20, 21, 41.
That's
The
not
4-to-1,
updated.
4-to-1 split. Not a 10-to-1 split. I think there's been so many splits on a lot of these big tech companies that people are confusing which one was which one.
Wow. Let's check the Yahoo just to be certain. Why do they change everything? Like, just change it to annoy you.
Yeah, by the way, that when the stock splits happen like that, it really affects the options trades that you have in the works if it
Yeah.
splits over your expiration date. I got to tell you, that's something to
It
have
was
to deal with.
it was 10-for-1 on June 7th.
June 7th this year?
Yeah.
Yeah, okay. So that makes sense. Okay, yeah, that's
Maybe I'm looking at a different ticker symbol here.
well,
Yeah, I
Yahoo.
was pretty sure we had a 10-for-1.
Yeah, yeah, I
There's
know it
two
was
stocks.
pretty recent. I
Yeah.
don't this whole Yahoo. I don't know. Yahoo's turned into awful. So I'm gonna have to find a new
New
market.
source.
Yeah, it's terrible. And ours isn't updated. Here you go. So
Yeah.
anyway, okay. Yeah, so that makes sense then. The earnings per share. So okay, let's go through the earnings trades. So bullish pre-runners. We got one open Marvel down slightly. We got five closed. Four winners, one loss, and we're up a little bit overall. Bullish runners. So I think this one just closed out. DHI down a little bit. Overall up real strong with the bullish runners this time. Five, and this is going to be a loser. This should be closed out already. And then bearish runners, we got three active there. One down, two up. Nothing closed yet. So we'll see how these do overall. And then we go into vol rise. This thing's been good. Vol it's been good. Told you guys. So this one's up near AMBA, but we got five close. Decent, good profit here on four wins, one loss. And two open. So it's really, the two that have been carrying us are, this time has been bullish runner, and I can't tell you which one's going to, do it each quarter. With, vol rise has been good, past few quarters, but, as far as the other ones, I can't predict, and then non-mover, I think is down. This one's usually good. And, we're down like a decent amount. Three trades, two of them losers, one's a big loser. So, I just can't predict which one will do well, but overall, they, usually, mostly profitable. Like you guys can pull up on those Excels, but that's about it on earnings. Any questions, comments on that? No? Okay. Well, I'll turn over to Joe holding those levels. You can see. You ready, Joe?
Sure, Josh. Let me see. I'm trying to share here.
Yep.
This darn thing is
Yeah, I don't know why
changing.
for no reason.
Is it up? Okay.
Yeah, got it.
Yeah, okay. Hi, everybody. Sorry I missed you last week. I do think, the one thing that, and Josh, thanks for the, thorough review of so many numbers. We do have escalation on the geopolitical front, which, whether that turns out to be a really significant headwind or not, we can never know. But certainly things have amped up geopolitically. So, that's a concern for the markets, I think, at this point. But and I think a lot of the things that Josh pointed to is still kind of a bullish overview of the markets, from what I'm looking at. But I'll go through a few things that suggest we need a catalyst. And I do agree with everybody. I really do think NVIDIA is going to be the catalyst. And so, tomorrow night's close to me will kind of be awful important to see whether we get a green or a red candle tomorrow, if there's any magnitude to it. Just a couple other things to add on with regards to NVIDIA. We've mentioned this before. The margins are extraordinary. I think the street's still looking for that 75% margin, which is crazy, but that's what they're looking for. The revenues we talked about, a little over 33 billion, 29 billion of that expected from, the data center business. Gaming, which used to be their thing. I mean, it still is, but that's just 3 billion in revenues is what they're looking for. And from a guidance perspective, from what I read, they are looking for 37 billion in the fourth quarter, up from 33 billion this quarter. And I looked at a couple different sites, and Josh had pulled up Trading Economics, 75 cents. I've seen 74 and 75 cents. So, you know, bring it on. It'll be, you know, interesting after the close. In terms of, you know, numbers that occur, we got a bunch of stuff coming from on top in NVIDIA. We have, you know, a lot of the Feds are reporting over the next 4 days or so, Philly Fed and KC Fed tomorrow. There are a couple of them next Tuesday, Richmond and Dallas, just to give, I guess, some idea of the underpinnings of the strength of the economy or lack thereof. We got PMI Flash Friday, Michigan Sentiment Friday, and then we get out to the PCE index next Wednesday. So a fair, you know, fair amount of numbers, you know, over the next week. But I think, you know, tomorrow night's close will tell us an awful lot about, you know, where maybe we're heading over the short term. I do have a bunch of charts, but I will start with, since we're almost through earnings, I'll start with this, you know, Refinitiv site that, you know, just does a great job with 460 of the 500 reporting, 76% have beat, 19% below. So that's 76%, you know, and the expectations were high. And, you know, we've got 76% beating. I think historically they talk about mid to high 60s. So, you know, companies for the most part are delivering on the earnings front, which obviously is critical. And then going forward, you know, we're looking for, you know, almost 9% earnings growth here, just below 10% expected in the fourth quarter, as we've talked about over and over. Double-digit earnings growth expected in 25. So, you know, this quarter was another good quarter, and from an earnings perspective, and part of the rationale for the markets doing as well as they have. Real quick on a number of charts, and, you know, I missed last week, so no post-election discussion. But I just thought a lot of these charts have a lot of similarity. And I think by tomorrow night's close, we'll know whether the gap of November 5th is going to be filled. Basically, in SPX, we still got another 70 points to the downside if we're to fill the election gap. And Josh already pointed out, you know, we're long in the tooth here, but, you know, at 67 days in state one. When I was going through this morning and looking at things, it surprised me. Josh, I don't know if you pay attention to this too much, but number of state one occurrences, and I was on another chart, and you know, there were 64 state one occurrences, and it hit me, you know, my gut reaction was like, darn, only 64 state ones going back to 2007. And then, you know, as we'll see over a couple charts, you know, that 60, 65 range seems to be the number of state one occurrences. And that, it just really surprised me. It was that few in the major indexes going back to 2007. So, you know, will we fill the gap? Again, I think we'll have a darn good idea whether that's going to happen, or we're going to be off to the races again, you know, depending on tomorrow night's close. It's SPX. NDX, we got 100 points to the downside there to fill the election gap, and you know, it'll be interesting if we hold target one instead. And then Russell, we got about 40 points to the downside to fill that gap. So you know, a lot of just consistency in the charts, you know, from a gap perspective on the election results, and you know, it'll be interesting to see whether those gaps are filled. What I wanted to do, since we've had 2 weeks since the election, I thought I would take a look at each of the sectors to see how they've responded. And so from the bottom of the list on up, here's real estate. And, you know, real estate basically has been flat, no real reaction to the election. We've got the materials, and, you know, materials, you know, one of the two sectors that have gone down. And, you know, kind of interestingly, if I go back, I don't know if I can find it, but one of the two sectors that has had negative earnings is, here we are, materials, down 6.9%. So, you know, lo and behold, the numbers actually make a difference sometimes. So, and this thing, I've mentioned this before, there are a bunch of different stocks like Lindy at 17%, Sherman-Williams at 7%, Air Products, Freeport Moran, they're 5 and 6%. So, they basically, I guess I didn't go further into the weeds whether, it was one or two companies with earnings that have driven this thing down 7%, on the recent earnings cycle, but one of the few that are down. There are a handful that are up, and then a bunch that have gone sideways as well. The utilities, essentially flat since the election. And these are 6-month charts, not the year charts, just to kind of focus on the short term a little bit more. Energy, not a surprise. You got the gap up, and with drill baby drill, certainly not a surprise that you may get a bit of a jump here. But when you look at energy longer term, that's a pretty good resistance line across the top. So we'll see whether this thing can really get up and go. And it's Exxon, it's Chevron, Conoco. Those are the 3 big ones in here. And I guess if it's going to get up and go, it'll be, about earnings expansion, multiple expansion, excuse me. XLP basically been flat to consumer staples. You got Costco, Procter & Gamble, Walmart, Coke, Pepsi, essentially sideways here. So no real reaction to the election. The industrials have pretty much, you got the gap, and similar to the index is seeing whether this thing back and fills or not. Let's see, we got the communications, which is Meta and Google. They're both almost 20% of this thing. You got Netflix and Disney. So, they've done, half decently since the election, with a nice green candle yesterday. The consumer discretionaries, it's basically Amazon, Tesla, about 20%. And then you get some others like Home Depot and Lowe's, McDonald's, things like that. And a little bit of a run since the election. And I think there were about 5 that had decent runs, since the election. Healthcare is one of the couple that have been down, and I guess there's some talk, putting pressure on, some of the margins of these different companies in this sector. So not a surprise, that may be down post-election. XLF, we talked about that right before the election. It had been awful strong and continues to be. It's led by Berkshire Hathaway, JP Morgan, both of those 10, 11%. Visa, MasterCard, in the mid-7s. But, if the market's going to get up and go, I would think this thing's got room to run as well. And then XLK, and I got the longer-term chart here. I got the 5-year chart. And the reason for that is because, this thing has been such leadership. We came out of the COVID lows, bottom left of the chart. We basically had the bear market of 2022, heck of a rally out of there, sideways into the lows of fall of 23. And then, we had another monster run up into mid-July. And, we had the August 5th lows, and this whole thing to me has been a correction. And, I'm not sure if there's any parallel, but, we basically had about a 4-month correction in 23. This thing's been running since mid-July, about another 4-month correction here, with higher lows. So I think that, where the last cycle for NVIDIA, I didn't think, was so much of a potential market mover. I think because it had run so far, it was time to pause. The earnings were good, but I didn't think it was a market driver. I do, this time around, think that bring on tonight's numbers and let's see where we close, tomorrow night. So, and this thing, I think a number here. So where are we closing? 238 is the all-time high, and so we're not far from that. these are all-time highs. So actually, no, back in July, but I think that 238 number in XLK is really one to keep an eye on. We're only a couple percentage points away. So, again, I think by tomorrow night's close, we'll have a pretty good idea whether this thing is going to be off to the races again. They were the sectors. I did think just taking a look at the equal weighted SPX, might be worthwhile post-election and very similar to the other indexes. It has not, back and filled to the point where it's filled the gap, but, pretty similar looking chart. And this was actually the chart, that I was first looking at where I saw 64, occurrences of state one, and it surprised me as being so few. So, which, I think is good. I guess, Josh, someday we could do, some studies on the effectiveness of the state one and state eights. But like I said, I was darn surprised it was only 64 over all these years. So just, equal weighted, still doing well. Let's see. I'll jump to the NVIDIA chart. And again, just going way back in terms of, overall, were we 8787 as we were kind of in the 22 bear market. And then, of course, we turned around in 23, had monster run in state one. We get into the 1212. What's a little bit different in this cycle for NVIDIA is that we've been in state one for 41 days already going into the cycle. I don't know that that's a headwind, but I just think it's worth, just paying attention to. If the reaction to tonight's earnings is negative, I would think we'll probably roll into state two, and that will have implications for the market. But, you can see we had a 255-day run in 2017. So, there's potentially a long way to go. It just caught my eye that it was close to the average state one move. Let's see. Going backwards, a couple other charts. RSP. Yeah, just, looking at market pulse. And I think this kind of speaks to the market needing a catalyst. S&P 500, with bullish and bearish states. We had that little crossover in a lot of the indexes right before the election. And then, we get bullish again, in terms of bullish and bearish states, what just cracks me up and suggests that we need a catalyst. Here we are, above and below the 20-day average. We're almost even, 250 up, 250, below that 20-day moving average. So just, I think, further evidence that the market is looking for a catalyst. And, lastly, kind of the same thing with the Qs, overall constructive, bullish and bearish states, but, within 10 in terms of, and it happens to be more below the 20-day moving average and above, but pretty similar as well. So, it's, I think, all about NVIDIA. Bring it on. The markets are looking for an 8% move. The at-the-money straddle stock's basically trading around 145. The at-the-money straddle, when I looked about a half hour ago, was just under $13. Couple different sites. We're talking about, an expected 8 to 8.5% move. We'll see what happens. 75% margins, 33 billion in revenues, 74-75 cents expected, and looking forward to seeing how the market reacts to the numbers. Open to all comments and questions. And Dave, your comment about the overheating. I wonder whether that came out a couple days before the earnings announcements, so they could kind of diffuse the market. It will be interesting to see how much of that they get into tonight. But, on the surface, the initial headline, I would have thought, darn, that could be really significant. And, maybe they got it out there just kind of manage the street a little bit.
Joe, let me just comment on that for a second. That is not really new news. The the users or the customers of NVIDIA have known about the power consumption since they announced the product. But the question was, well, are you going to do anything to resolve that NVIDIA? If you go back and look at when there was sort of the pullback quarter and a half ago in NVIDIA, that was when they announced that they were redesigning their chip because for design changes. And now that the design changes have already happened and some of their customers are still experiencing servers overheating, with the new product, that might be more of a concern than the problem has always been there. The question is there a solution for it? And SMCI was and their stock was taking a real hit because their regulator stepped in and said, "Hey, you guys have some accounting issues here." But their solution was to go to a liquid-cooled environment for data centers. And I've been online saying that that's not a good idea. I used to manage a Cyber 720 back in the 70s and 80s, amongst other things, and we ended up giving up on that just because the plumbing and the cooling that wasn't air cooled was just not worth it over time. So they're trying to resurrect that idea of that's the only way to get these chips cooled with a liquid cooling environment. And it's a bigger problem than a layperson kind of understands, I think. So we'll see what I'm be interested in. I'm sure there'll be some Wall Street analyst that's going to ask that question, and maybe the CEO will address it during his comments that he's organized with 4 questions and answers. If not, if he doesn't, I'd be very suspicious, and then we'll see how he reacts to the question. I'm sure somebody will ask that because it's a big issue. If you can't run your data center, as designed, if you're going to have to rebuild your data center just to use a new product, that doesn't go over well, usually with a CFO and those kind of people. We'll see.
That's for sure.
Yeah, we'll see. So it's not a new problem. The question is there a solution for it? That's the real question.
And do you typically listen to the NVIDIA conference call?
I tend to get that about every other time, but I always listen to the AMD one, the Intel one, and I'm going to listen to that one tonight. So at least I have my own comparison on the 2 CEOs and their style of delivery.
Right, exactly. That's why I asked. So it'll be interested to hear what you can report for us next week, Dave.
Yeah, sure. My own. I don't know what it's worth, but I'll give you my opinion. Thanks, Joe. Oh, and your comment was interesting about the 61 state A's, state ones, and all of the S&P 500, which kind of just points to the concentration of the stocks that are holding up the index. And I don't see that necessarily changing in the near term because, like you said, what's the catalyst that's going to change that? I don't see one.
Yeah, me either. Well, thanks, Dave. Anybody else? All right. Well, thanks for joining, Josh.
Yeah. Thanks, Joe. Thanks, Dave. We'll wrap it up, and thank you all for tuning in. We'll do it again next week. Thank you.
Bye-bye.
Thanks.